Hi everyone. Hi, welcome. So as you can see on the screen today, we're going to have a different topic. I guess we never have this discussion before, which is focus more on the commodity market. And I will tell you why I decided to go for this topic later. And like how does commodity can help us in terms of capturing the market opportunity and also make profit. So maybe we can just wait for a couple more minutes, see if any more people joining us. But before that, if you have any question regarding the market, you may type up in the chat box and see if I can answer your question. I guess recently there's only two asset classes that have a outstanding performance, which is Wall Street and crypto market. Not sure any of you guys captured the trend. Hi, Almo from Sudan. Can you guys raise your hand? Any crypto enthusiasts here? Or everyone here just to trade on like forex pairing, gold and etc. Almo trade. So you capture any BTC bullish trend? Bachelor or Meta Traders 4? And just for your information, especially for Almo, we plan to discuss a little bit on cryptocurrency market in the upcoming webinar. So you're welcome to join us in the next session. Hi, Mahmoud. Hi, Bogdan. Nice to see you. Maybe we'll just wait for one more minute just to see anyone is joining us in the last minute. Hi, Nicola. Okay, guess we shall just start. So before we start, as usual, allow me to read out the risk disclaimer before we start to discuss on today's topic. This webinar is for informational and educational purposes only. Nothing discussed today should be considered financial advice, investment recommendation, or an offer to trade any financial instrument. Trading CFD and other leverage product carries a high level of risk and may not be suitable for all investors. Due to the nature of leverage, losses can exceed initial deposit. So it is important to fully understand the risks involved before engaging in trading. While we will discuss market analysis and trading strategies, these are purely for educational purpose and do not guarantee success. By participating in this webinar, you acknowledge that Prime and I are not responsible for any trading decision you make or any losses incurred as a result. Right, that is the risk disclaimer for today. Nicola Foster, your first time joining us. Thank you so much for supporting us. And yep, so let's start. Yep, you guys can see on your screens, today's topic, we will just surrounding the discussions on the commodities markets. These are the topics that we're going to cover. I will just tell you why I choose this topic to share with you guys, to discuss with you guys. And these are some of the commodities that I want to introduce to you guys. And lastly, I will pull up the economic calendars for the next 7 trading days. And I'll point out some of the very important event for you guys. So hopefully it might help you guys when you trade. Okay. Yep. So why trade on commodities? Okay, I'm just share a bit of the story. Why I come up this story is that because you guys probably know about the trade war that triggered by President Trump after he declared a global sweeping tariff. And yeah, of course, I think most of the people just focus on like what countries that he targeted on and how many percents that he imposed the tariff to, and also later on the retaliatory tariff from the counterparties and things like that. And some of you might also notice that not only the bilateral tariff that President Trump imposed on the counterparty, but he also have some very specific tariff on specific goods, imported goods, and one is the rare or raw material, including the aluminium and steel and whatnots, right? So when he actually announced this tariff, this policy, and I noticed that some of the commodities prices actually have a very significant price volatility. And in terms of trading with CFD, in terms of trading on our platforms, we don't care whether or not the price is going up or down. But what we love is actually a good enough fluctuation, a good enough volatilities that allow us to capture. Because when there's a change in price, there is a chance for us to jump into it and to capture the trend, and hopefully, finger crossed, that we can make profit through the price volatility. All right. And why? And beside that, beside the Trump policy, right, and also beside the recent trend, it is also a good alternative, I would say. And because I'm not sure any of you is like very new to trading, or you guys are very veterans, have like a few years of experience in the trading world. I'm not sure like how many of you guys share experience some sessions or some weeks where the traditional thing that we usually trade, like forex pairing, like gold, or even the equities market, sometimes it could be quite boring. By boring, I mean the volatility is very, very low, okay, and there's like no trend, or although there's some sort of volatilities, but maybe the direction is not that obvious. It's hard to guess, it's hard to predict. When also we pull up the technical analysis, we still can't tell, or not confident to go into it, and to we like 50-50 of chance, and we're probably is going to make losses rather than make profit when we trade. And we might tell ourselves that maybe this is not the time, this is not the markets that we usually trade, why not we take a good rest? You can do that, but I'm here to offer you an alternative, or give you an alternative insights, that why not you can also have a glimpse on other things that we don't really look into it, and it probably will offer you a chance to gain extra profit. Here is the commodity, and the beauty of the commodities market, not only gold or oils that we usually also will trade into, but some other minor commodities that we also can look into it. Like just now I show you guys, we're going to talk about copper, we're going to talk about cocoa and etc., where the factor that actually drive the prices for all these commodities are very different. And it could be very decoupling from the traditional factor that we trade. And yeah, it could have their own trend on markets out of the traditional things that we trade. For example, let's say we have a very stable US CPI reading, we have a very stable non-farm payroll, and then Fed didn't announce anything. President Trump stable, didn't announce anything, and maybe for that particular week or for that particular month, you might observe that, oh, the market is quite quiet, quite boring. Like Wall Street just closed with the market plus minus 100 points, for example. Gold daily volatility is just like 100 pips or less than that, and same goes to the forex pairing. And most of the time in this kind of market, unless you are a scalper, unless you are very satisfied with like 10 pips, less than 100 pips of profit, and most of the people are going to lose money because of a fake in, fake out, whatnot. Then why not we can try the commodities market where they are driven by a very different factor. Okay, so most of the commodities, like any other thing, is the price is actually pretty much driven by the demand and supply. All right, for example, cotton. If the demand for cottons is very, very high for this season, for example, then it's quite sure that the price for the cottons will goes up. And also if and another example is that for example, like maybe we have some situation where the supply is disrupted. Okay, for that quarter, for that season, we have a very limited supply of cottons. So yeah, the same logic, we're gonna witness the cotton price to surge, to spike up, right? So and all the commodities that we actually discussed today mainly will be driven by the demand and supply factor that is various across different commodities. Okay, coffee, they would have their own demand and supply factor. Cocoa will have their own demand and supply factor. So this is the beauty of it. So when the traditional market is very boring, when the Fed is doing nothing, when President Trump is doing nothing, when the Bank of England is doing nothing, when BOJ is doing nothing, when everything is stable, market is very stable, then probably, yeah, we can look into some of the factor that's going to have an impact on the prices of different commodities. Probably, yeah, this is a chance for us, right? And also sometimes when you got so like confused on the markets now, okay, for example, like last month we do see the gold price has been climbing, and then it's almost like reaching fresh new highs and whatnot. And then since last week, it suddenly toppled, okay, drop and keep dropping, and it's like still dropping, and there's still no catalyst, and we don't know when is the end of the decline and when we can see the gold to climb back to the previous high. And sometimes we got confused, and yeah, this is the time where we can find some alternative to trade, and this is the time where we can also consider to look into the commodities, and hopefully we can gain some profit from it. Another things that really a factor that why I say we shouldn't miss out the commodities market is actually there's a lot of commodity offer a high price volatility, and the price changes throughout the year can be much significant as you compare to gold, as you compare to oil, or even some of the forex pairing. Okay, which means that allows you to hold the trend for longer, and it allows you to capture a bigger profit. All right. So hopefully you are like convinced, or you got eye openings to the commodities markets. And also, like later on, if you really want to try out, it is okay for you to create another demo account and try it out with the commodities, and try it out with the different trading strategies, that maybe you can learn somewhere else, and you not need to like actually go straight with the capitals with you now, right? Yeah, so first things that we want to discuss would be gold. So yeah, gold I think would be the most valuable commodities that we have in the world, and this is also one of the most traded commodities amongst traders. And yeah, it's very famous. That is why the liquidity is very high. That is also why to make it the price volatility quite high, and we always got different trading opportunities at different time zone, because people in America, people in the Europe, people in Asia, everyone trade gold. Yeah, that is why they make it so special and so popular. Okay, but gold actually it has a very limited usage of it. Most of the value of gold is actually just to store the value. Okay, and also just to make jewelry and some very glamorous stuff. The usage, the real, or I would say industrial usage for the gold is very limited. Okay, so the demand and supply is pretty much depends on on the central banks. So most of the central banks in the world, they will store gold as a just a safe in value, to yeah. And most, because we know gold is denominated in USD. So when the value of the USD actually will have an impact on the price of the gold. So when the US dollar is relatively cheap throughout the year, then probably it will drive the demand for gold higher. And it is the chance for the central banks to jump into it, to buy more gold, and ultimately will push the gold price higher. That could be the logic behind it. All right. And what I always say, central bank, because central banks, the government, have the strong buying power, strong enough to have a direct impact on gold prices. Because I'm not sure like how rich are you now, listen to me, but for me, I'm a very small potatoes. I'm not sure if I have the money to buy 100 ounce, or I will just buy 10 ounce, which I really can't have an impact to change the gold prices with the buying power I have. So most of the time, people, when we talk about the demand, as we are talking about the big player, the institutional player, or the central banks that can drive the demand and supply, and we can change the gold prices. And just now when I say gold is just a store of value, so itself there's no value. But because it is so rare, it is very precious. That is why since like long time ago, 1,000 years ago, people used the gold to trade, store a value. That is why given this very meaningful commodities to this thing. All right. And another very beautiful characteristic for gold as the market treat it as a safe haven asset. So it means that during the time of uncertainties, maybe last time and during World War II, and maybe last time when we almost have a World War III, like when Russia started war with Ukraine, and then it involved the NATO's, involved the Western allies, and after that, involved in some of the communist countries that is backing the Russians and things like that. When it involved a lot of people, it made the war so severe. And during this kind of uncertainty, because we don't know when the war is going to end, this is the time will make the gold to spike up, because some of the things that we usually trade, like when we hold the stock, where we hold in the indexes, ETF, these kind of things often will decline in price during war or during time of uncertainty. But people know when they hold the gold, the value of gold will be relatively stable. So during the time of uncertainties, and the latest one, when Donald Trump announced this global sweeping tariff policy, actually most of the people will just rush into gold and just throw away some of the assets that not so populous during the time of uncertainties, and they will just dump everything, but then buy into gold to save the value of money. So this is also one of the beauty of it. Anytime when you see something that pop up, you know, unforeseen, then this is the time where we see the gold to reach in a higher level. All right. Next thing is very, very similar to the gold as silver. So silver is also a kind of precious metal. Share almost all very similar characteristic with the gold. Only the difference is the usage, the industrial usage for silver is much higher than gold. So gold, most of the time, it just put it there to show like a very luxurious stuff, make an art, make a jewelry, and or just store in a gold block under in the central banks. But silver, people are actually using it as because it is a very good electrical conductor, right? So people use silver to make a lot of electronic product. So yeah, this is one of the different thing that can change the demand and supply for silver as you compare to the gold, and this is also a factor that can drive the silver price. So in the past, when the market is less when the market is more stable, people actually use the price of the silver to gauge the strength of the economy globally. So when they see the price of the silver going up, it means that the demand for silver is high. And why? Is because it is widely used in a lot of industry, and people know when the price of the silver is going up, it means the economy is good, the economy is booming. Okay, so vice versa, when now at this moment, when you know about it, and next time when you screen through the economic indicators, or you screen through the news, and when you see, the global central banks, from the ECB, BOE, BOJ, Federal Reserve, everyone is cutting interest rate. And later on, when you see most of the very significant economies, they have a better than expected GDP. And later on, you see a better than expected PMIs. All the indicators indicates that the economic is turning good, turning bullish, everything is so good. Then maybe this is also a chance for you to look into silver, because we know the demand for silver is high because the economy is booming. They're going to demand for more silver to make more electronical product. So yeah, this could be it. And also similar to gold, we look at the US dollar. When the US dollar is weak, then probably you might drive the silver to spike, because it make the silver cheaper at first, and then like a lot of people rush into buying silver, and then later on ultimately will drive the silver price up. So this is the logic when you want to trade silver. All right. All right, moving on. Also, another traditional commodities that usually traders will look into it, which is, we call it the black gold, crude oil. Okay, we know with us or with most of the trading platform, they always show different prices, big two different prices. One is the WTI crude, and one is Brent. So one is controlled by the US side, and one is controlled by the British. So they have two different oil price index. All right. Yeah. So I think everyone know the how important the oil it is to us in a daily life. Like I think most of the people drive. If you don't drive, sometimes you fly with airplane, and sometimes you buy goods from other country, needed the shipment, ship use oil, and also some of the industrial product we use oil as well. So I think in our daily life, we cannot live a life without crude oil. So yeah, the demand and supply of oil definitely will have the impact on to drive the crude oil up and down in terms of the price. Okay, so I point out these three major factor that probably will have an impact on the oil prices. So next time when you really want to trade in the oil price, you may just look at these three aspects and you guys can make your analysis whether or not this could drive the oil price up or down. Okay, for example, the latest news is the US going to sanction the Iranian oil and also sanctions on any countries that import Iranian oil because the US want to interrupt the Iranians to build their own nuclear weapons. Okay, so what is the logic behind this move? Okay, this means that Iran as a country that export an amount of oil that could alter the supply of global oil supply. When one country that is very significant in the crude oil supply that is sanctioned by the biggest economy in the world, it means that we are expecting a short-term or a shortage of a crude oil supply disruption. So when this news came out, is regardless on what could it happens 3 months or half a year later, but just when this news came out, it actually already drive the oil price high. And at the same time, okay, another story is that when President Trump announced the very aggressive trade policy, and at the same time, OPEC actually announced they want to resume full supply for all the members of OPEC. So on one hand, we already know when President Trump potentially is going to trigger a trade war that could harm the demand. On the other hand, OPEC supply more oil to the markets, and it's like dampening the oil prices at the same time with these two factors. So economic growth, we are talking about, President Trump trade policy, and OPEC as the ones that have the most impactful in terms of oil supply. Okay, and the third one is the dollar strength. So when the dollar strength is too high, it could make the oil price more expensive. Then it will also have a minor impact on the oil prices. Okay, so these three are the key factors that I can tell when you want to trade in gold. So also another factor that I can provide to you guys is you guys can also look into the economic strength of China and India as the world largest oil importer. So when their economic is booming, when they probably is going to demand for more oil, it could drive the oil price higher. So economic indicator from China and India is very important when you want to trade into oil, sorry. Okay, so yep. Yeah, move on. Will be some things that is less or not everyone is trading, which is copper. And actually copper is the price that reflect the most when Donald Trump announced they want to have a tariff targeted on the imports of steel and also aluminium. And coppers are actually also impacted by this policy and spike up high. Okay, yeah, as any other current commodities, copper also have their very unique demand and supply factor. And I want to share with you, I think for me, copper, the price will just keep on going to get climb higher and higher year on year. Okay, why? Is because everyone know EV industry is booming. We can see more and more electrical vehicle on the road day by day or month by month, right? So when we talk about EV, then this copper is one of the material or one of the commodities that we cannot avoid, we cannot dodge. Okay, because when we talk about manufacturing battery, or when we talk about manufacturing the electrical vehicle, copper is heavily used in this industry. So I would say the demand for copper will actually will continue to climb, and which will ultimately catalyze the copper prices continue to spike. Okay, so when you look at Tesla share prices or the sales performance and some of the big China EV manufacturer, when their sales is climbing, and when you look at the sales of the global EV sales, then this is also one of the very significant factor that can drive the copper price. Okay, and also, very similar to oil, China actually consume about 50% of the world copper. So they are the biggest buyer in the world copper. So again, when the China economic is very, very good, they're doing very well, and the People Bank of China is cutting interest rate, putting a lot of economic stimulus package to the economy, then we can just on and off have a glimpse on the copper price when it go to a relatively low levels where we can really chip in to enter a long positions, and it is a chance for us to capture some trend. Okay, I can just share with you the copper price. And you can see actually the price is quite volatile and offer you a lot of chance to trade. Okay, and in fact, I just want to show you that I'm not sure any one of you know about this. Gold price actually have just less than 30% of gain in 2024 throughout the year. But if you look at copper price from 2024 to 2025, it actually has a bigger gain than gold prices. Okay, and the up and down, the roller coaster is actually more volatile than the gold. So this is also something that can be lucrative if you are so pro in trading the copper. And the latest one, why I talk about this is like the copper actually have a very big swing in this year, and it's because on one hand it actually affected by at first Donald Trump announced a tariff on steel, and later on when the flew blown of a world trade war, when President Trump announced the global sweeping tariff, it lets the copper to have a sharp dive, because when there's a trade war, it definitely will have an impact on the global economic growth, and so will have a direct impact on the demand for copper. So when this thing came out to the news, not only we can look at the dollar, not only we can look at gold and oil, also we can look into the copper, where it also offer us a very huge volatility, where it also can offer us a good chance to capture more profit. All right, and then next one is cocoa. Yep, I think everyone loves cocoa, right? Everyone loves chocolate. So the main raw materials to make chocolate is cocoa. Okay, and then nowadays everyone just eats things that make out of cocoa or chocolate. We have chocolate biscuit, we have chocolate ice cream, and I think the cocoa price will also keep on to climb, unless we only can see like a very minor price corrections. But I think ultimately, if you really hold the cocoa trade long enough, I would say there's a very big chance for you to make profit. Why? It's because the growth of demand for cocoa is actually gaining every year, 15 to 20% every year, is very stable. And if you compare to the people that are actually consuming chocolate in the early 90s or in the 80s, where only the filthy rich, the top 1% that can enjoy the chocolates, and compared to it, the time now where we live, I think everyone is affords to enjoy the chocolate productions. Okay, where we can very easily go to a convenience store to access to like chocolate ice cream, chocolate biscuit, and just chocolate bar itself. Right, it's not as expensive as previously. But what happens now is that the weather, the global climate is getting more and more extreme, which lets the world biggest countries that produce cocoa have the hard time to supply enough cocoa to cater the global consumption. Okay, the biggest cocoa supplier are actually from the West Africa. So they supply, I think, 30 to 40% of the global cocoa. And recently, they have a very difficulties in supplying cocoa. And at the same time, the demand for cocoa is quite stable, continue to climb. And where you can see the cocoa price is actually very crazy. And this is why I want to share with you guys. There is a lot of chance to capture a huge profit if you really look into the cocoa. And yeah, you can see the spike here for the cocoa in the early 2024. You can guess like how many percent it gained. It's gained nearly 200% in the first half year of 2024 for cocoa price. What make this happen is that, just like I say, the West Africa, they have a very severe supply shortage due to a very extreme weather, and also due to crop diseases, and also and then the weather just not allow the farmer to harvest the enough cocoa to cater for the world to supply to consume, and lets the cocoa to have the largest shortage in 60 years. This happened in the first half year of 2024. That is why we can see the cocoa prices climb crazily, about 200%. And you guys see, if you zoom up enough, you can see after this spike, every time when we trade in the market, we know after a very extreme trend, we do get a corrections, and then can just go back to the normal levels when the shortage issue is over or is solved. But if you look at the cocoa price, is actually very stable around the elevated level here, and it's potentially continue to climb as time goes by. And when you have your children, or when your children grow up, I bet that the cocoa price will continue to break a new high and one another. Okay, so because it's less and less people are actually planting cocoa, harvesting cocoa, and the extreme weather make it harder. And at the same time, when we are getting richer as compared to like 100 years, 200 years ago, and then we have like booming economy from China, from Southeast Asia, from America, from some part of Africa. Everyone is getting more and more affordable for the cocoa, make the demand for cocoa as high. That's why in this kind of demand and supply factor, I believe eventually, ultimately, will let the cocoa price to continue to climb. Okay, right. Same moves on to coffee. So coffee also have a very stable growth rate year by year, but at the same time, the supply is actually can't catch up with the demands that we have here to this day. Okay, so if you want to trade on coffee, one of the hack for it is you can look at the weather in Brazil, and also maybe in Vietnam, because Brazil almost cover half of the world supply. So when the weather in Brazil is good, when the harvest in Brazil is good, then probably will come the coffee prices in a more stable manner. But if let's say we see, because in the South America, sometimes we experience tornado, typhoon, maybe too heaty, right? Then we're going to have a very bad harvest for the coffee, and then we're probably going to see the coffee price to spike. And you can see actually the coffee price is also very, very volatile. I think not everyone always look into the coffee prices, right? You can see it's very, very volatile, and the beauty of it is actually if you look at the no daily time frame, you can see it's actually continue to climb, because if you look into some of the data, like how many coffee shop or cafe open a year in China or around the world, you might get shocked. Like the demand for coffee is actually climbing higher and higher. In China itself, it's already 15% year to year, year on year. So you don't talk about some of other countries like Korea is also very addictive to coffee, and Southeast Asia, people also drink coffee. Like Vietnam is one of the biggest coffee supplier as well. And I think in the entire or the European, most of the time we'll have a cup of coffee in the morning, right? To make us awake. And I think the same story goes to America, and then we know like Starbucks, the biggest cafe chains, is actually from America. So yeah, the American actually drink coffee a lot. So we have a very stable growth rate in the coffee demands, but then at the same time we got stuck with the coffee supply, because most of the time we really rely on Brazil. The what we call the Arabica coffee, that actually from Brazil. So this is the beauty of it, and it's like now also stay at the like all-time high level. So I guess if no any might big things that happens that dampening the demand for the coffee, I'm sure coffee prices will just continue to climb higher and higher. While this is just H4, I can easily already draw a uptrend support levels over here. So when if anytime when the price touch anywhere near here, you can really just give it a try. Maybe enter a long position. Then yeah, see if we can really capture some very nice, handsome profit later with the contract that we open. Okay, so remember the later three commodities that I share with you guys. Most of it are quite heavily used in the industry, and I think in the next 5 to 10 years, I see the demand side is very, very strong, and on the other hand, I see the supply side is quite constrained. So I would say like copper, coffee, and cocoa. These are the commodities that really you guys can really look into it when the traditional market is quite dull, or the things that you always trade is quite boring. So maybe you guys can consider these commodities. All right. Here come to the final slide. This is the some of the that's going to happen in the next 5 trading sessions. And I just want to point it out some of the big events that have a direct impact on some of the commodity forex or currency. First thing is the pound sterling. So as you can see, the BOE will have their GDP coming up next. Why I talk about GDP? Because recently the pound sterling is kind of weak as you compare to US dollar, as you compare to Australian dollar and New Zealand dollar. And yeah, we know tomorrow we will have the GDP from the UK. And if there's any chance for the GDP to show sign of a economic contraction, turning backwards, then we can continue to follow the recent trends where the pound sterling is weakening. All right, so this is the chance, and this is the things that you guys can consider where the chance for it to short some of the pound sterling related pairing has a slightly higher chance to make profits. Okay, the next thing is the US dollar. We know after the news of the China and US trade deal in like the first day of the week, we then already see the US dollar to getting stronger and stronger. But then the latest trend just make the dollars is very, very unstable. But Same time tomorrow, we do have the retail sales reading, as well as a very important Jerome Powell speak tomorrow. So hopefully Jerome Powell will address some of the thing that the traders want to hear, which is the monetary policy updates, and also address some of the policy that imposed by Donald Trump. Then hopefully we can see a more clear directions for the dollar, and at least we can know what to do. If let's say we have a good reading from the US side in terms of the retail sales, and at the same time, if Jerome Powell sound very hawkish, and after that we already know the GDP from the UK is not as good as the market expected, then it is wise for us to try on a short position for the GBP USD pairing, right? So this is the general idea for the for tomorrow. Okay, and lastly is the Australian dollar. So we will have the Reserve Bank of Australia to announce their interest rate decisions next Tuesday. So the market now is pricing in that the RBA will hold a relatively hawkish stance manner, where the market is expecting the RBA to hold the rate unchanged, leave the rate at 4.1%. Okay. If you look at the recent economic indicators from Australia, you can see the Australia economic is actually not too bad. And also now at the same time, because the US and China has already shake hand, hopefully, finger crossed, the economic growth in China is not too bad, and which will also have a spillover effect and do good for the Australian dollars. Adding that, if really the RBA official later on after the announcement of the rate decision say something hawkish, push the Australian dollar higher, and yeah, you guys know what to do, right? You guys can have a bullish bias on the Australian dollar. All right. So here is some updates for the economic calendar. So here comes to the end of our today's webinar. Now I'll open for the questions. If you have any questions to ask me, you can type it up. Thanks for Mahmood. Any question, guys? Any questions from you guys? And I think, one of the commodity that I actually didn't cover, which is the new darling in the markets, the digital assets, cryptocurrency, which is also might serve as a commodity, might categorize as a commodity, where I plan to discuss about it in our next session. So hopefully I can see you guys again in the next sessions, right? That is also quite challenging for us to venture into cryptocurrency. I'm not sure how many of you has already tried your hand with the cryptocurrency, because the price volatility sometimes could be very crazy, and you could burn your hand, right, if you catch the wrong trend. So I try to do some homework and prepare you guys before you really venture into the cryptocurrency market, right? Thanks for Carmelo, and also the rest of the people here. Thank you so much for your support. And yeah, if you have no questions, we're going to end the session here. Hopefully to see you guys in the next round. Bye bye.